Welcome to Ask the Experts. In tonight's episode, we're busting the myths around credit scoring, looking into how credit reference agencies are delving into our lives and exploring ways to work within a system you can't opt out of. I'm Reya El-Salahi, and joining me to answer your questions live this evening from Which Money Online journalist Reena Sewraz. Good to have you with us.
Thank you.
And the head of policy for the debt charity StepChange, Peter Tutton. Really good to have you with us. Now, this evening's live Q&A comes as an investigation by Which has found that many of us just aren't aware of the everyday actions that impact our credit scores. And that was an investigation led by Reena. The article's entitled Credit Scoring, Are You in the Dark? You can head to which.co.uk/money to read that in full. But Reena, your findings, how well informed are we when it comes to understanding the everyday actions that impact our credit scores?
Well, not very, unfortunately. In March, we put together a quiz using 5 different scenarios, just based on everyday actions, and tested Which readers to see if they knew how those actions would boost their score or drag it down. And actually, what happened, the results of the quiz, over 50% got 2 out of 5 or less, and only 5% got 4 marks. So, you know, we thought that suggested maybe we're in the dark on this process, and we should look into it. And
what sort of things are we perhaps unsure about? What are some of the surprising myths you've busted?
Well, within the quiz, one I found quite surprising was your credit card and how you spend on that. So maxing it out and then repaying it. Normally, you know, the advice is, you know, that's a good way to manage your credit card, but actually using a lot of your credit limit can actually lower your score and impact it. So personally, that's something I do. I've been caught out by that. I have a reward credit card and I collect Avios points. So that's something I do. I put all my spending on it and pay it off. So I had no idea that was something that could impact me. And just generally talking to other people about credit scores, we found a lot of younger people thought actually checking their credit report would have an impact. It really doesn't. So yeah, just there's so many that came up in the process of the investigation.
All those myths busted. Don't forget, throughout this live stream, you can get in touch to get your myths busted. If you have a question about credit scoring, do get in touch. You can comment below this video, post your question, your comments just there, and we'll put them to our experts this evening. Now, you spoke to some people about their examples, their experience rather of bad credit, of what's happened to them. What impact did you find in some cases it's had on their lives?
Well, it's an enormous impact on key life moments, actually. In one case, we spoke to a lady called Charlotte. When she was 22 years old, she took out a loan to buy a car, was making repayments, everything was going really well. Then suddenly her repayments started getting rejected. She investigated it, she didn't know what was going on. She eventually found out the company had closed down, but she had no idea who to continue making repayments to. So she forgot about it. You know, she tried her best at the time. A few years later, she tried to rent a property and actually failed a credit check for a county court judgment, which is a CCJ, that had been put on her file by the company that had got the debt. So, and they were chasing the repayments, but didn't know how to.
And she had no clue about this, but it nipped her in the bud, so to speak, a little later down the line. Peter, how often do you find with your work with StepChange that this sort of story, people are facing debt because of something they actually perhaps didn't know about initially? How common is that?
It's not uncommon that we'll see people who have debts that they don't necessarily know about, or often in the sort of where, say, something's happened to someone and their finances have got out of control. It's easy to lose track of things. We do see cases where people have sort of mistracing and things like that, so people are being pursued for debts that they don't think are theirs, which may not be theirs. So there's a bunch of different things that happen in terms of kind of how people sort of get chased for things or deal with debts or know about their debts. This isn't helped by things like not all different credit reference agencies will have different debt information. So if you're trying to, one of the things we need to do as a debt advice agency is get a very clear idea of what someone owes. It's very important for certain types of debt remedy, and actually you can't always tell from one thing alone. So there's a kind of issue out there that even if you do check, you may not find out all the information that's there on you, because different credit reference agencies may have different information.
With that in mind, Reena, how much of a sense is there that the system is broken, that there needs to be more done to simplify this process?
I think just in the course of the investigation, talking to people, they just know so little about what everyday actions impact their credit score, how they can check their credit report, how they can update information on it, how they can correct errors, and you know, all of that just leads you to a place where you feel really powerless to change something that has such a huge impact on sort of every corner of your life at some stage. Your
questions are answered live here in just a moment's time. But first, let's just run through some of the basics, some explainers and some advice. This one, I think, you know, we might be embarrassed to admit, some of us might not know what this is. I'll put my hands up. There was a time when I didn't know what my credit score was. What is a credit score, Reena?
Well, a credit score is just a sort of numerical representation of the information in your credit file. There is no universal credit score. A lender will have their own credit scoring system to decide what number you get, and their own sort of ratings of that, of like whether you're good, whether you're bad. But what the credit reference agencies do, there's 3 of them in the UK, TransUnion, Experian, Equifax, they are the data custodians. They gather all the data, and they provide a service where they give you a score, so you know where you stand, so which you should find out.
And Peter, in the course of your work, how powerful do you find these scores are in terms of people's ability to get out of debt?
Well, there are actually a couple of different issues with that. So the first issue is if your credit score does deteriorate, which it can do quite quickly if you find yourself in difficulties. You'll be going along quite nicely, lose your job, struggle with repayments, your credit score starts to deteriorate, but people that are trying to keep up with payments might use credit to do that and start using more and more high-cost credit, and that can create a spiral that turns that financial difficulty into really serious debt. So there's a thing there that as people go on, they get sort of more excluded from mainstream credit. That's one side. But the other thing that can happen as well is actually some consumers are quite desperate for obvious reasons to kind of keep hold of their credit score, and so will try and keep up with their credit repayments, and maybe either use other credit to do that, or will go without or not pay their rent to keep up with credit, and you get into that juggling of payments. So there's also a thing that worries about credit scores. When we polled our clients, about 1 in 5, when we said, you know, why did you wait before getting advice, cited worries about their credit score. So people's perceptions of the importance of their credit score can lead them to behaviours which in the short term might seem rational, but actually in the long term can lead to your debt problems getting bigger and more out of control.
It is understandable though, isn't it, that it's a scary subject if you're saving up or you're thinking about buying a house, whatever you're doing, to learn that you've got a bad credit score can be terrifying. How and why should you check it?
Well, I think sort of why. You should check it because there's an enormous amount of information being collected about you, your everyday actions, and that's your financial CV, it's your passport to doing things in life, and it's sort of up to you to make sure that that information is up to date and also accurate. You know, it should be something as regular as checking your bank statement. It should be something you do every month, and with all 3 agencies really. So just making sure. And you can do it through all the 3 different credit reference agencies in the UK. So TransUnion has a service called Nodal. You can check what Equifax has on you with ClearScore, and Experian has a free service as well.
Okay, so it's free to do?
Yeah.
Okay. Of course, if you want information about doing that, of any money tips or advice, head to which.co.uk/money. And while we're on it, in fact, Peter, talking about debt, people are concerned about anything to do with debt or financial management. How can they get in touch with your charity?
Well, if you go onto StepChange website, it's probably the first way to go. Look at our website, there's lots of information on there, and that will take you on to where you can contact us by phone, or we have tools that you can look at what are some of the best options for you to deal with your debt online as well. So look for StepChange, Google us, and follow on from there.
And importantly, all that information and advice is there for free.
Absolutely free.
There are times, Reena, when you find errors on your credit profile. As you mentioned earlier, what should you do if there's a mistake on there?
Well, when we spoke to the credit reference agencies, they were really keen to sort of put across that they check the information that is reported to them for errors, for mistakes. But we did find errors do creep in. We had a case where one of the people we spoke to, she tried to apply for a credit card and she got rejected for that. And that was because of a mark on her file with Equifax, I believe, put there by a utility company. She didn't know about that. It was a mistake. But even though she got that cleared up, actually the damage had already been done because a lender had rejected her. So there was a rejection on her file based on an error. So, you know, it's a really serious situation when that happens. What
are your rights where that's concerned? If you find that there is a black mark on your credit report and it's a mistake, do you have the right to have it wiped?
Oh, absolutely, yes. So the process of that is obviously where it gets tricky and you really need to follow it through. The first step is to contact the credit reference agency that has the incorrect information. What they can do is then go to the company that reported that and mark that section of your credit report as disputed while they do that. And there's they probably have 28 days to investigate it. But the thing to point out is credit reference agencies can't actually remove the data. They have to wait for the company to say, yes, that was wrong, you know, sort of admit it. And in that situation where you sort of come to a catch-22, a standstill, you might need to consider putting a notice of correction on your report, which is a small statement which alerts lenders to your side of the story, really.
Okay, so there is some recourse you can take to deal with this. Okay. We are going to be taking your questions in just a moment's time, so do get those comments and questions in under this video, whether you're joining us on Facebook, on Twitter or on YouTube, however you're watching this live stream. If you've got a question about your credit score, about debt, get in touch with our experts and we'll be putting those questions to them in just a moment's time. Peter, what's the first step to take if you're worried about debt?
Well, first thing to do is to get some advice. I mean, talk to your lenders is generally a good thing to do, so so they kind of know what's going on, can help, because they may be able to help you. They may be able to give you what we call forbearance, to give you some time to pay or help you restructure your debts or just know where you are. Come and talk to someone like StepChange. The earlier you can come, the more options you've got. So if people can come early, we can help you work out a budget, see what you can afford to pay, reschedule your finances so you're paying the most important things first, and help you negotiate with your creditors to reduce if you've sort of got payments to credit debts that you can't afford, to try and get reduced payments. If your problems are more serious, there's a range of different options for dealing with debts. There's pretty much always some sort of solution for people out there to help them deal with debt problems. So it is important to get advice. The longer you wait, often the worse the problems get. People get horribly stressed, and that's where the problems really begin. It's that kind of stress, the effects on your health, the growing pressure of the debt. So getting advice early is a good thing to do.
I mean, it won't come as any surprise for anyone watching this. The impacts of this are absolutely huge. What sort of stories do people tell you about what's happened to them as a result of this sort of thing?
Well, I mean, just, you know, so half our clients, we talk to our clients and half of them say that they've had treatment for mental or physical health problems directly resulting to their debts before they've come to us. We know that it breaks families up. We know that people lose their jobs because of the pressure of their debt. The consequences of debt are huge. We had a go at sort of monetising the total cost to society for ill health, lost productivity, families breakdown, and it comes to something like 8 billion for the people who are in debt at the moment. So the consequences for people are horrific. The consequences for all of us in terms of what it costs, of the damage it does, are really very, very big.
Right, time to take your questions now. If you've got any question around credit scoring, around debt management, money management, financial advice, do get in touch. We'll try and get your question put to the experts and answered here on Ask the Experts this evening. Just pop your comment in the box below this video and we'll get them answered. Right, let's kick off with Toby, who says, years ago I rented out my property to tenants who didn't pay their TV cable subscription. They've long since moved out, but the impact on the credit score means the TV company still won't install at the same address. Is there anything I can do, Toby asks, to remove the black mark on my property? Reena?
Well, this sort of sounds like another sort of credit scoring myth, actually. A credit score isn't attached to a property. It's attached to an individual, so your credit report follows you rather than sort of leaves any mark on any property you've ever been in. Sorry. So actually, I don't know who's at fault here, but it could be that Toby, you might have a shared financial connection with your tenant through a utility bill, through an account that you might have together, and you might want to explore whether it's on your credit file. So checking across all the 3 agencies and seeing what's there that's actually the problem.
Yeah, and a really important point there of that joint bill issue, that if you live in, I don't know, a student house, a shared house, and have bills where you share the bill under all of your names, you are liable potentially, aren't you, for other people's debt?
Yeah, absolutely. I think this is a sort of problem that hits students and stuff like that. You don't realise actually opening a joint financial product can create a link between you two, and or 2 or more people even, and that can sort of have repercussions later down the line if you don't end those financial associations. Yeah, the effects are wide-reaching.
Yeah. Vicky asks, can private landlords refuse to rent to me because my credit score is really bad? Peter, do you want to pick this one up?
It is an issue, and actually, we've just been talking to our clients, and some of them found the same thing. So you don't have a right to a private landlord to rent to you. So if they do credit score, they do check. So it may be the case that some private landlords might turn people down, and that's one of the worrying things, really. That kind of people need somewhere to live, and there's a kind of question of if people have got some problems in the past that they might be getting over, that shouldn't affect your ability for basic things like housing going forward. So this is one of the things that we worry about, that the credit, it wasn't set up to do that. And now it is being used for things that it wasn't really set up to do. It was set up to aid responsible lending, to make sure that credit was affordable, but it's getting used for more and more things. So there is a concern there.
And Reena, can landlords check that sort of information about you without your consent?
Well, they have a right to sort of credit check you, I think, in some way, to verify your identity, that you are who you say you are, and I guess to some extent that you will pay your rent. I guess there's an argument for them to do that, but I agree with Peter. This wasn't what credit scoring was set up for, and I don't think this is why Experian or TransUnion or Equifax would say they gather data about us. I think it's about preventing being over indebtedness, identity checks and anti-fraud measures. I don't think it should affect housing.
Good evening to Pax, getting in touch with us on social media to say, great advice, I'm going to check mine now. So there you go, someone already taking the advice on board. Debbie asks, is it a good idea to have a lifetime mortgage?
Well, that's
big question.
That's a big question, and probably something I shouldn't be offering advice to you about. We have loads of advice over on the Which website about lifetime mortgages. But in terms of your credit score, if you're going to apply for a mortgage product, it's always a good idea to check your report across the 3 agencies, make sure everything's in check before you apply, because what you don't want to happen is for you to get rejected, because then you're going to be caught in a spiral.
On that point, we've had another question in from Annie, who says, why is my credit score different on Nodl and ClearScore?
Well, I think that's a common question we actually get at Which and on the helpline as well. So, as I've mentioned before, there's 3 different credit reference agencies collecting data about us, and sometimes that data is different, and each of these 3 agencies actually have a different scoring model. So, you might have a score of 477 with Experian, that's actually considered poor, but with TransUnion, which uses Nodl, it might be really, really good. So you need to make sure you're looking at the right scale for where you're getting your information.
That is confusing, isn't it?
It is, yeah.
Really confusing. Michael Tomlinson has been in touch to say, it seems in the past an application for credit would register a search on your file, and the more searches there are, the more likely your score would drop. Can you describe the new soft searches that are hopefully going to be more available? Who wants to pick up on that?
Yeah, I don't mind. Well, soft searches are a really great thing if you're looking for a loan, a credit card, and you want to get the best deal. More and more lenders are offering them now, so it's just a way for a lender to look at you, who you say you are, all your details in your application are correct, but it's not a hard search, so it won't leave a footprint on your report, which means other lenders that look at you, they won't see that lender's been there, if you know what I mean. So it's just a really good way to find out what you're eligible for before you do the hard search, because once you do the hard search, and if you're rejected, applying for credit again actually will be really difficult. But yeah, soft search is a great idea.
Do keep those questions coming in. Get in touch by commenting under this video. Whether you're joining us on Facebook, on Twitter or on YouTube this evening, welcome to Ask the Experts, your chance to put your questions tonight on credit scores and debt to our experts. Talking of which, Peter, question in from Lynn, who says, if you've not heard about a debt for 6 years, you've not heard anything about your debt for 6 years, is it true it's automatically cancelled?
Not cancelled as such. There's a thing called the Limitation Act and the statute of limitations, which means that after a certain period of time, that a creditor can't start a court action in respect of that debt. Now, different debts have different periods, but for most debts, 6 years. If a creditor hasn't, from the cause of action when you fell behind with payments, they've got 6 years to take court action. Now, that clock can start again if you acknowledge the debt or make part payment. So there's some complexities in there, but it doesn't mean the debt is cancelled. So you could still get, say, a letter from a debt collector or something like that who might say you owe this money, but what they wouldn't be able to do, if it is indeed statute barred, is begin court action. So that's what the sort of 6 year thing is. It's just to make sure that creditors can't pop up and take you to court years and years after the event.
So no sense then that if you ignore people trying to get in touch with you for 6 years, after that 6 years is up, you're free?
No, it doesn't quite work like that.
Joe asks, does a bad credit score mean there's no hope of ever getting a mortgage?
Oh, absolutely not. There's actually so many options you might not have realised. We've actually done some research on this recently and looked at the specialist lenders that are out there, but also the high street banks that are willing to lend depending on your situation. You can read it. I think it's on the Which Money online site. It's called Bad Credit Mortgages, which lenders will lend to me. Really easy to find, but no, it's not hopeless. And you can always rebuild your credit score. Don't ever feel like it's the end.
We are almost out of time, but I want to finish on a question that I think will get you both talking. Abbas has been in touch to say, the moral of the story here is that you shouldn't spend what you don't have. Peter, what's your response to that?
Well, that's kind of a good sort of good point. I think the problem we have with what we see with debt is two things. One is that people are managing their credit reasonably well, and then something happens to them, lose your job or have a period of illness, and most of our clients, that's what triggers their debt problem. Is you can afford it one minute, the next minute you can't afford it, and you're sort of pitched into that difficulty. But then the other thing that happens is that people may then use credit to try and manage that, and we see a lot of people, particularly people who have, in a period of very low income, it's do you take credit out or do you not feed your kids? And when people haven't got any choices, that's when it gets really difficult, and that's where it's important to that's what advice does. We can help can people get some money for things like benefits that they haven't entitled to? Can we help them reset their finances through budgeting, take the pressure of paying credit you can't afford? So it doesn't really work like that. People, on the whole, we find people are quite good at money managing, but things happen to people. Your boiler breaks down, you have to repair it, you use credit, the payments are difficult, something else happens, and the problems just build up over time.
How much of a sense is there that there are patterns in the sort of people getting in touch with your charity? Is it young people? Is it older people?
It's a really good question, and I mean, debt problems can happen to anyone, so we see the whole of society, but there's a definite patterning to it. So yes, now I think over 60% of our clients are under 40, so it's getting younger, and that's probably to do with younger people being under more financial pressure at the moment of housing costs and gig economy, all that kind of stuff. It tends to be people on sort of low to middle incomes. It's very much renters at the moment. 80% of our clients are renters, because renters, again, housing pressures through rent, cost pressures, but also tend to have less sort of armour if something goes goes wrong, if you have a shock, you haven't got sort of like housing wealth or something to draw on. So there's some very definite patterning in there about who is struggling at the moment. It is, as you'd expect, it's people who are vulnerable to things like employment shocks, people who can't build up savings, kind of that, people who haven't got very much to protect them if anything goes wrong.
On that point, if you are concerned about debt, we've mentioned the links before, but Peter, how can people get in touch with you? How can they find out more about StepChange?
So the best thing is go to Tinternet and StepChange Debt Charity, put it in there, you'll see our website. It's got lots of information. It's got a phone number on there that people can contact us on, and we've got all sorts of tools on the website that can help people understand what's the best solutions for them, understand and think about do they need some help, and with information about specific problems.
And final point, if people are worried, your advice?
Our advice is free. So it's free and confidential.
Reena, if people would like to find out more about the investigation which prompted today's discussion, an investigation which you published this weekend on Which Money, how can they find out more?
Just head to the Which Money website and take a look. It's on the front page at the moment, or just have a search.
Good stuff. Thank you very much indeed for watching. I'm afraid to say that is all we've got time for. Peter and Reena, thank you very much indeed to both of you for joining us and imparting your wisdom on us all. For more expert advice, head to which.co.uk/money. Thanks for watching and see you next time. you.